Shares of SERV Robotics have been all over the place over the past couple of years. Shares skyrocketed when NVIDIA announced that it had taken a stake in the company, but earlier this year, NVIDIA sold their shares and the stock is down about 68% since then. But is this an opportunity to buy a company that's at the forefront of robotics and robotic delivery? That's what I'm going to dig into today. And there's a lot of things to look at. I think it's pretty compelling what SERV Robotics is doing. Yes, it makes sense that you shouldn't use a 2-ton vehicle to deliver 2 pounds worth of burrito. And SERV Robotics has done a phenomenal job getting huge partnerships with companies like Uber. But does that make the stock a buy? The financials may tell the story. So I'm going to cover all of this today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. But if you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. The first thing we need to look at is what exactly SERV Robotics makes. This is the one product that they have in the market today. It's this little autonomous robot, relatively small vehicle that delivers food in densely populated areas. I think that's one thing that's really key to point out. This is not something that's going to make its way to most parts of the Midwest, for example, where I live. This is going to make sense in San Francisco. It may be in Los Angeles, possibly in New York, but it's not going to be something for everybody. So the hardware and the software that SERV Robotics is going to build is going to have to scale in a relatively small geographic area. Now, it can possibly do that, but that's sort of the challenge that the company has. When you think about autonomous driving and the companies that are building products for autonomous driving, they're going to be able to scale that to almost anywhere in the world. This is not the same kind of product that's going to scale anywhere. So this is a niche solution for a product, for a problem that's very real in food delivery in this example. But if the economics don't back it up, if the valuation doesn't back it up, then it's going to be a real challenge for investors. It's also worth pointing out that SERV Robotics has developed some pretty good partnerships. It says that Uber Eats is going to deploy 2,000 sidewalk delivery robots. Now, this is getting pretty old. This is from 2023. And since then, what we've found out is that Uber is working with basically anybody that's building autonomous anything, any sort of autonomous vehicle, an autonomous robot. They're happy to work with anybody and then just be the platform that's connecting the supply, in this case, food, with the demand, which is somebody who is trying to buy food. And then they're going to work on who's going to do the logistics in the middle. That's really the challenge for a company like SERV Robotics. Is the market big enough? Can they extract enough value from a partnership like this with Uber to actually make the business work? So let's go through some of those financials, because I think this is where the business gets a little bit more difficult to analyze. Despite the fact that SERV Robotics announced that partnership with Uber Eats specifically in 2023, company only had $1.8 million worth of revenue in 2024. So this is not quite a pre-revenue company, but it's pretty close to pre-revenue. If you look at net income and free cash flow, the picture is looking pretty stark as well. Net income over the past year, negative $39.2 million. Free cash flow, negative $31.8 million. Now, the balance sheet is okay. There is $123 million worth of cash on the balance sheet. So that's a few years worth of runway given the current cash burn. But SERV Robotics still has a market cap of $408 million. So are they going to be able to live up to that by growing into this business? We simply don't have evidence that that is going to be the case today. And that's the real challenge. So I put SERV Robotics in the camp of companies that could potentially disrupt the way that we should think about autonomous vehicles. It's an interesting form factor. But right now, I think this is an uninvestable company because the fundamentals just don't back up what management is saying and what these partnerships are saying. It's great to put out an interesting press release like they had with Uber Eats. But at the end of the day, if you're not able to deploy these by the thousands, potentially even millions, then it's just not a good investable business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other thing I think we've learned over the past few years is that autonomy itself is becoming much more of a commodity. So the form factor of vehicles is likely to change. Right now we have Waymo is the biggest company that's on the road with fully autonomous vehicles. They have basically one form factor. There's a Jaguar. They're going to move to Hyundai with a custom-made vehicle that's going to be made by Hyundai. They're going to modify that when it comes off the line. But that's a vehicle that's built to transport people. And there are several thousand Waymo vehicles on the road today. But what is that business going to look like if there are 100,000 Waymo vehicles on the road? And now we're suddenly delivering a lot of food all around the country. Waymo is going to be able to customize those vehicles. Maybe it's not Waymo that customizes the vehicles. Maybe it's the automakers where they say, you know what, Waymo, you can buy passenger vehicles that are built for 2 people. You can build vehicles that are made for 7 or 8 people. We can modify them so that you can put a bunch of pizzas in the back where there's a refrigerator in them. It makes more sense that these companies that are scaling their businesses are going to be building custom vehicles rather than a custom company comes in and develops a completely niche solution, because that's exactly what SERV Robotics is doing today. Now, if the evidence and the financial evidence showed that SERV Robotics was really making fundamentally a different product and they were able to make a really good business out of this niche, that evidence would point me in a different direction from an investment perspective. But I think right now, what investors want to be looking at is who is aggregating that demand and who is turning that supply, that robotic supply, into a commodity. It's companies like Uber. It's companies like Lyft. Without them, SERV Robotics basically doesn't have a business. So if you look at the point of value in the value chain, the point of pressure, who can actually extract some margin from this business, it's going to be those two companies in particular, because they're going to be the ones who are going to dictate the terms to SERV Robotics, or to Waymo if that's going to be a supplier, or to Tesla if they end up on their networks, or Volkswagen, who's building vehicles in partnership with Mobileye. There's potentially a ton of new suppliers, a ton of new form factors that are going to be coming to platforms like Uber and Lyft. And that's why ultimately I think the value is going to come from those marketplace companies that are connecting demand with supply. That's where customers are going to choose to go every time. And they're not going to care if their burrito is delivered in a 2-ton vehicle or whether it's delivered on a sidewalk by a SERV Robotics autonomous vehicle. That may be the harsh reality for some of these innovative new companies that are developing interesting solutions. But the best case scenario, I think, for a company like SERV Robotics is that they're acquired by one of these other companies that need sort of a bolt-on acquisition. Maybe you need another form factor. Maybe you have a little bit of a hole in your technology from that last few feet of delivery. Maybe this is the kind of thing that could bolt onto the back of a Waymo vehicle or a custom-made vehicle that's on the Lyft or Uber network. That could be potentially an interesting place to do this. But SERV Robotics as a business today, I don't think has a lot of upside for investors simply because their financials don't support it. But let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.